Hey guys, Taylor GammaEdge here, coming at you with a 5-minute recap from SPX session June 2nd, 2025. So at the open, we had a failure to go lower than pretty much the stair step up the rest of the session. A lot of pin action within our transition zones. And so once we got out of that, we saw some significant buying with the filtered tick and obviously a nice ramp into the close. All that's well and good, but let's get in quickly into our pre-market prep and then how our tools played out intraday. So here first, as we always do, looking at SPXA. We can see that above and below spot price, we are call dominated, so that is constructive from a bullish point of view. Second thing to note, we were implied to open 58.85, I think it was. Key fulcrum in the structure was 5,900. That's what we were saying. You'll see that both SPXA here and the SPXP in a second. So by key fulcrum, that simply just means a key level in the structure that we want to be above, a line in the sand. Again, here's SPXP, just noting a call dominated above the spot price again. So from a full context point of view, that is constructive. Then right, if you're not, familiar with the difference in SPXA versus SPXP, you can go look at this blog article, GammaEdge.us. Then we hit on the market trend model coming into the session, fairly muted sideways. Think of it as a pullback in the context of a longer term uptrend. From a bullish point of view, what we wanted to see is, a resumption of the move higher, basically action like this. But just coming in looking at this right now, this doesn't look terrible. A bit of a breather, which was warranted. So all that to say, SPXA, SPXP full complex, we're looking constructive. Yes, we were a bit weak at the open coming into the session, but we were call dominated. So we expected that, all else equal, that should be bought up unless we saw some material selling transact intraday. And then getting into our 0DT complex, sorry. Yeah, so looking at the DEX transition zone 58.95, 59.10. Let me show you this example. It's a bit better. Yeah, so simply put, we expect choppy price action within the DEX transition zone and then more broadly within the junk and sailor range. Again, the junk and sailor range can be contextualized as an area where we have kind of minimal influence from options itself. So intraday volume and the actually opening and closing of transactions is going to have much more of a prevalent impact on price itself. That's why we pay attention to the market trend model. That's why we pay attention to our intraday volume tools that we'll get to in a second. But nonetheless, the key upside strike of the junk and sailor zone was 59.20. So really what we're looking for here is a move through 5,900 because that's a key psychological level. That's a key level on the full complex we just looked at. A move through 59.10, which is the top of the DEX transition zone, and then ultimately a move through 59.20. And if we do get above 59.20, then that likely correspond with, buying in the market that we see via the market trend model, via the vol M, and that would give us confidence of seeing higher price action. And the same thought to the downside. Obviously, we were opening 58.85. Keep in mind this is in the middle of the chop zone, so we're not interested in getting too aggressive to the downside, especially given we were in a call dominated environment still. So we would need to see the market trend model, vol M, which is our intraday volume analysis, really start to trend lower, and we break below 58.50, which is the key downside level here. And again, yeah, I know you guys can see current price action here, but what's important to note is the levels that we have marked on the chart. So this is bottom of the junk and sailor range. This is top. This is our transition zone. This is 5,900. So right, we got a pretty nasty sell off the open. However, weren't coming close to breaching 58.50, which remember was kind of our key downside level of where we would start to get more bearish if that was to be overtaken. But here, there's really no reason to be going to short the hole. We weren't seeing really anything in volume or market trend model at the time, which we'll get to in a second. And then right from here, we do get bought up. We spend a good amount of time in our DEX transition zone. And you can see this consolidation right at the DEX transition zone. Pretty significant, quick move through the top of the DEX transition zone into the junk and sailor range. And then right, we just see a continuation higher from there. And then, right, not to mention, we get above the opening print, get above an upward trending VWAP throughout the session, and you can just see how there's a lot of confluence between some of the levels in our structure analysis that we use, but then some simple, other market generated information as well. Right, for myself, I keep it very simple. I just use our structural levels. I also throw in, just a little bit of the opening print, prior day close, VWAP, just because through my experience of trading, we often see price interaction around those levels, and not to mention that they generally correspond well with the structural levels in the options market as well. So it's good when we see confluence as an example, the prior day close in the top of the DEX transition zone, powerful confluence there intraday. Additionally, another example for you here, we had nice confluence between bottom of the DEX transition zone, the opening print, and VWAP, able to hold this level, and then a nice progression higher. And so, yeah, as you start to kind of incorporate these levels into the existing toolkit that you have, you should hopefully start to see confluence as well. Lastly, just want to hit on the market trend model real quick. It was fairly flat throughout the session. What we did see was a pretty significant ramp. This was like 210, 220, saw a filter tick buying as well. So that was constructive to see it, especially into the close. We had a relatively strong close. So really from here, what we want to see is a continuation higher. Right, and maybe it was a coincidence, maybe it wasn't, but we got that same breakout of the top of the drunken so range around 220, exactly when we started to see that significant buying coming into the market as well. Right, and the last of what we want to do real quick is hit on our intraday volume analysis. If you're not familiar with this, we have an article on a blog about it. But simply put, what we do is we monitor SPX 0DT call and put volume throughout the session to understand the character of what strikes are being targeted throughout the session. More importantly, just understanding the distribution of volume throughout the session. By understanding that, we can understand the behavior of speculators, which helps to inform us of the character of price action, and then understanding the potential pass of price through the close of the session. And so a couple of things to note here. Yes, we saw a bit of aggressive selling off the open, but what we do see is from the call centroid side, even the put side, we don't see any aggressive, a continuation of speculation lower. Like, if this was to continue lower, I would expect to see the put side trend significantly lower. The call side continue this right here lower, but it just stayed relatively flat throughout the rest of the session. Put centroid side, which was trending higher throughout the entire session, really. So what that tells us is, there's zero urgency in the market, really, of forcing kind of a downside move via downside speculation. You did get, kind of signs of that here, but that was quickly bought up, and really there was nothing from the call side really following the put side. And so, this gave us nice confluence intraday, at least as we started trading above our key level, as 5,900 right here. Then we got 5,910, 5,920. This was continuing to ramp as well, along with the market trend model. And we often see, confluence between the market trend model and our intraday volume analysis for the most powerful trending trades. And this just doesn't have to be. Sorry, let me restate that. What I'm trying to convey is that this tool is very helpful for multiple different types of trading strategies, whether you're an intraday futures trader like myself, or you're an options spread trader. Just understanding price action and utilizing our tools in the context of each other is super helpful. So as an example, if you're an option seller, knowing that we're starting to trade above our transition zones, not able to take out 50 put speculation is trending higher, that helps us kind of isolate one side of the market, right? That being, there's really no evidence to understand why the market would go lower on the day, all else equal. Yes, there could be some news event that comes out, but we cannot predict that. What we saw through the context of our tools is everything was trending higher, trading above those key transition zones. And then even to the upside, right? We weren't seeing any material speculation up in this area either. So, if you're wanting to sell calls on the day, then that kind of gave you comfort as well that we likely weren't going to see like massive ramp. And so I know I'm over my time. I just want to play this GIF of all of our volumes that we stitched together throughout the session. Here you can just see really just the character, how we just continue to trend higher with the call side, put side continues to trend higher as well. So let's let that play through. And yeah, so with that, the takeaways should be, kind of understanding how we go from our pre-market prep to utilizing that intraday for trading opportunities. And so with that, I know a little bit over my 5-minute mark, but hopefully the information worth it. Interested in learning more about us, GammaEdge.us, a lot of blog articles there. We have curated playlists for you in the YouTube description below. So with that, y'all have a good night. We'll talk to you later. Thanks. Bye.